Hi, everyone. I'm DeFi Dad, and this is episode 9 of Yield TV. All right, Anthony, welcome to the show. Hi, everyone. This is my friend Anthony Bertolino. I've known Anthony, I've known you for about a year or so, and Anthony is going to talk to us about really like bridging the gap between legacy finance and where we are with Ethereum, getting ever so close to Ethereum 2.0. One of the things I really love about talking with Anthony about Ethereum and about crypto in general is that Anthony has worked in traditional finance, and he is, like I said, deeper in the weeds than anyone in terms of he can talk to you about Ethereum 2.0, but he can go into topics about yield and yield farming and DeFi. So when you talk about that journey that we want everyone else to come along and getting those people onboarded into our space, Anthony's lived it. So anyways, Anthony, welcome to the show. How are you doing?
I'm doing well. Very happy to connect again. Thank you for getting me on Yield TV. Super excited about this new project you're doing with Zapper. And you guys are an amazing platform. So this type of, call it news, is definitely what's needed in the space to keep up to date.
Oh, thanks so much. And it's funny, of all the things I was saying I admire about you, I forgot to mention, Anthony has a great podcast called the Ethereum Entrepreneur Podcast. You can follow him at Ethereum Pod, and then his own Twitter handle is iDecentralized. Anthony ran out of guests, so he had me on early on. He couldn't get anybody booked, so I had to fill in. But it's a really fun podcast because I remember you telling me when you were first thinking about doing it that you just wanted to interview founders and spotlight projects that don't always get the spotlight. There's definitely a series of talking heads in our space, and while those folks do a great job of communicating what happens in our space, I think it's about highlighting new voices and all the new sorts of innovations. So anyways, good job.
Sure. Yeah. I mean, I started it because when you talk to like new investors, they think that Ethereum might just be like a corporation or some single project where it's, tens of thousands of entrepreneurs from all over the world, building this amazing future. And while there are people who get a lot of the notoriety, there's some amazing builders who just are not even really apparent on Twitter. You don't see them on YouTube. They're not in interviews, but they're building amazing public goods. And so I hope to be able to highlight that over time. I haven't had as much time on the podcast to spend on it, but it's enjoyable just connecting, and hopefully they can share their story.
Dude, why don't we start with that? Can you talk about what you mean by public goods? And then maybe we could even spin off into just why is Gitcoin grant so important? Because these are things that, like, I still think not enough people, even in our space, know what they are. Like, if you've never donated to a Gitcoin grant, you gotta do it. It's the best thing ever. But yeah, what is a public good, and why does Gitcoin grants help to fund public goods?
Yeah, so my definition might not be the best, but I think public goods are super important. If you go back to, say, just governments and where listeners might listen to this, right? If you look at, say, like roads have to be maintained as a public good that public can access. And you wonder, how is that funded, right? And it's funded through taxes. Now, if you look at Ethereum, the protocol, there's a lot of tools and a lot of goods that we use that need to be funded, but we don't have inherently a tax system built into the protocol to remain like neutral, provably neutral. And so then the question goes is, if someone wants to build, say, a DEX or, even just Ethereum as the base layer, right? Who is going to fund that development? And on a short-term basis, obviously we have the Ethereum Foundation and other projects who've raised ICO money. They can help contribute to that building. But on a long-term kind of sustainable basis, if Ethereum is going to be this neutral building ground, right, as a public good that anyone can access, how is that going to be funded? And so Gitcoin grants is the first really spearheading the way where anyone can contribute to these public goods that might not have a way to generate revenue. And if there's no way to generate revenue for your public good, how are you going to sustain development? And so Gitcoin has built a platform which uses quadratic funding, which is a quite complex kind of branch off of quadratic voting, which I don't know how to explain, but it helps to provably fairly distribute funds to a lot of these builders who need to be funded. And so right now we're in kind of the community funded stage, and Gitcoin Grants is doing an amazing job at that.
Yeah, you know what? Let me just pull up Gitcoin Grants while we're here, because
and I don't know how many days left in this round, but
so round 7 just ended.
Okay.
And I mean, I wish I knew how much these matching partners had thrown in. I'm sure it's listed somewhere here, but
yeah,
there were some big sums of money donated by Balancer, Synthetics. The Ethereum Foundation always comes through. And then there's lots of individuals here like Mariano and Robert Leschner and Eric Connor. So,
and this was like a paradigm shift this time, right? Whereas like before it was, say, consensus in the foundation. And so if you scroll up a little bit for the viewers, this is the first time that we now have protocols investing more money or donating more money than, say, the Ethereum Foundation, which is a huge step to long-term sustainability.
It is. It's really cool. And you're right. This was the first time that we've ever seen that. I do want to also call out the fact that, I mean, all these folks, it's so incredible that Definance Capital, which I think is Arthur Zero X's fund, and Three Arrows Capital, we appreciate the VCs as well, chipping in. Meme did something pretty cool. I don't remember exactly where or why they had those funds, but it had something to do with like they had some unexpected like funding or money like come in, and I think the idea was to give it back.
It's probably from their token raise. I mean, not raise, right? Like they did their airdrop, and then some of them got like $500,000, and so they were probably giving back. I don't know if it was Jordan himself or what, but that's just awesome in general. It's
nice. Just a good idea. Yeah, Yam did it as well. Anyways, this is great stuff. We love
Yam is super interesting because it's like a decentralized, it's a DAO that is able to pull from its capital pool autonomously, which is just insane innovation to fund public goods long term.
Why don't we talk about that a moment? What's the latest on Yam? I was just like a week ago asking a friend about it, and I didn't realize, you correct me if I'm mischaracterizing this, but my understanding was that Yam was like this FoodFi token. I actually had a pretty negative view of it for quite a while. My understanding is that today, while it started as a really experimental thing, my understanding is that now Yam is taking proposals of what to do with this treasury that it's built. And the idea is to put it into, I would call it like an experimental fund, put it into public goods that would benefit Ethereum. And I can't remember some of the ideas that were pitched, but I went from like, what the hell is this thing, to being like, oh, wow, that's really cool. It's like really like, it seems like its goal is to give back to the Ethereum community, which is great.
Yeah, Yam is probably one of the most interesting things to happen recently, and it got a lot of bad rep, and not a lot of people like actually understand it. So like, just to clarify a few things. So the Y in Yam is from Yearn. The AM from Yam is Ample. So it was supposed to be taking things from Ample, the mechanism rebasing, and then Y from Yearn. And it was the original food coin, and it was designed with novel innovations, and it was the first fair launch. So it was actually the fair launch food coin that spurred the craziness from the last few months, which was a lot of ridiculousness, but Yam is super interesting. And so long term, what Yam is trying to be is a decentralized organization that has multiple different arms, and one of them is funding public goods. Another one is going to be building like a treasury base, which will then be used to, say, fund new startup projects, build novel, interesting innovations. And the way I look at it is, it's basically Yam is a very interesting new organization or corporation that anyone can join, anyone can contribute ideas to, and it has an ever-growing treasury.
Yeah, and I would say that, so I have no exposure to Yam too. So like, again, I was critical of it. Now I'm critical of it. Yeah. So as I've learned more about this recently, the thing I think is promising is, I mean, there's a lot of, what do I want to call them? Like there's a lot of hardcore Ethereum evangelists that are that are behind Yam and in the Yam community, I have zero doubt that if the folks aren't delivering what they say they will, they'll get hell from them. And so I think it's interesting to watch. I am definitely looking forward to trying to have someone else from the Yam community on, someone from like the core team.
Yeah, you should have Trent on. He just released the roadmap too.
So okay.
You should take a look at that. It's a very serious project. It's valued at probably like 10 million market cap right now. And it's mostly because information asymmetry. People just don't understand.
Yeah. There's a lot of projects like that in DeFi right now. What, Anthony, what of all that's happened in DeFi, because we went through like quite a little mania over the last few months. We started out the year under 1 billion in total value locked. That was a huge milestone that was crossed, I think, in like late January. By the spring, we had all lived through like a crazy global like market crash that luckily bounced back pretty quickly, and crypto went down with the global stock markets. And ever since then, since Compound launched their token, I mean, we are now under 12 billion, I think, today in total value lock. So we're up 10, 11, 12x since the beginning of the year. What yield are you excited about? Like, what projects are you following that you think are, fundamentally sound projects that you could potentially yield farm?
Yeah. So I was just looking at the TVL total value lock chart, and I was like, this has to come down and consolidate, right? Like, 10 to 12 billion. And if you look
it doesn't have to. No.
Yeah, right. No, paradigm shift, McAfee style. But anyway, regardless of that, what I'm really excited about is this whole yield farming craze finally got people starting to think about yield in general, right? Like, how can someone generate, say, passive income from these assets? And what I really focus on personally for the most of my portfolio, because I don't degen farm because I can't really afford the gas fees mostly. But what I really like and what I think people should focus on is if you can build up, a portion of your portfolio that is non-inflationary yield, that's the best place to be. And so a couple examples. So very underrated project, Kyber Network. Kyber is a aggregator of liquidity, and their main kind of value prop is if you're a new dApp coming into the ecosystem, if you're a new wallet coming into the ecosystem, their biz dev team full time is locking in those partnerships. And so if, say, Axie Infinity or Argent Wallet or any of their Lush ecosystem goes viral and gets mass adoption, Kyber is the liquidity on the back end. And Kyber also has their own product, Kyber Swap. It's currently yielding about 10% annually, non-inflation. So it's actually, KNC is deflationary. So that's actual yield coming from fees paid to the network. So if you can hold an asset and get 10% non-inflationary yields, obviously from a degen farming perspective, it's super unattractive. But from a realistic investor perspective, that's pretty great, right? It's not inflationary based, it's passive yield. Okay. Now this is through Kyber. I mean, another one is Yearn, right? We all love Yearn. Yearn is yielding now around 10% as well. And these are from fees paid, real business model. I expect these things to be fully sustainable and continue on and continue to grow. And so from an investor who can say, I want to put in, $10,000 right away, you're generating, more than $1,000 per year. And, add that over time, these assets continue to appreciate in value. The fees continue to be generating more and more as we hit more adoption of crypto. You probably have a portfolio that can be yielding you $10,000, $20,000, $30,000 a year. And that's, very realistic and it's sustainable.
Yeah. And so let's go back a moment and just make sure folks understand when you say non-inflationary or deflationary, the standard that's been set by a lot of projects over the last few months, especially is, and let's go to the extreme of like projects where it's a copy paste, it's some like food emoji related token. You provide liquidity somewhere and then you deposit the LP token and you earn this new token. Those tokens they're releasing the supply of tokens. And so there's this inflationary schedule of just continually releasing it. And the thing is while that token could go up and down in price, the more tokens out there, a general rule of thumb for most of us is more supply, price normally goes down, all other things being held equal. So when you find something like what you're talking about, KNC, which I don't hold KNC right now, so I feel I'm on sound footing to talk about it. KNC, that's interesting. I didn't know that, and especially it being a more premier project. I mean, it's the number one. Is it the number one DeFi liquidity provider? If you want to,
probably, and it aggregates liquidity. So like Uniswap is plugged into it, for instance, and it's going to continue to have everything plugged in. But yeah, they just have a different business model, right? Like they're the backend infrastructure for dApps and wallets, etc. And so you're not betting on like one horse. But yeah, I probably skipped over that really quickly. But Kyber is a DAO, so you get ownership in essentially a protocol. And instead of the supply continuing to inflate and you are getting some of that inflation, which people say is yield, this is different. There's no inflation. You're getting paid in fees, real revenue, which is also yield. And it's just non-inflationary. So you don't have sell pressure on the native asset. Kyber also pays in ETH. So like you're holding Kyber in the DAO, KNC, and you're getting paid in ETH, which is also just great.
Actually, while we're there, because I am definitely like one of my blind spots is Kyber. Like I know it as something that provides me all this liquidity, and I'm very grateful to that. And it's like a very when I think about like top tier teams, I think about Kyber. Can you just quickly walk me through, or feel free if you want to, not to reveal anything in your own wallet, but the staking platform that they have. I've pulled it up before. I was curious how staking KNC actually works. Like, what's the mechanics of it?
Yeah, so I can go over it briefly, and I actually use someone who like essentially a partner. But the high level is if you own KNC, you're an ownership of the protocol. You can stake it as long as you vote each epoch, which is per week, you will get paid the fees. Now, because I don't want to pay gas fees, I delegate my KNC. Most of us are familiar with delegation models. And so I use Unagi, UNAGGI. It's like app.unagi.com. I believe that might be accurate. But they've built with Stake, the staking provider, they've built an interface where you can hook up your ledger, hook up your MetaMask. You can stake your Kyber to them. You delegate it. You still maintain ownership of it in terms of custody, and they'll vote for you. And you can just check in once a month, once a year, whatever you want, and just claim your fees. Let's see, if you have about $5,000 worth of KNC, you're getting about 0.1 ETH per month, roughly. So it's not crazy.
Oh, yeah. No. That's good to know. So it was about $5,000 of KNC is earning about 0.1
ETH per month.
And that is 0.1 ETH. Let's assume it's like $350. So it's about $35 times 12, about 420. So what's 420 divided by 5,000? That's about 8%. About 8% annual.
And that also is just to clarify, it'll float, and it was about 1.2 last time I checked, whatever, 1.2 ETH, but that's good, or 0.12. It's going to fluctuate based on the protocol, right? So now we see DeFi hype is coming down a bit. You'd expect DEXs to be less activity. You see less fees, right? When we go into another hype cycle or adoption continues, you'd see more use of DEXs, more use of liquidity aggregation. Fees would increase. So this is more akin to owning equity in a project rather than, say, farming a token. It's very different, but it's good to have in a portfolio and to understand. Farming is awesome, and I think farming with a part of your portfolio is great. And this is another part of your portfolio that someone should have. Not this in particular, but a non-inflation base, more ownership of fees generated.
Can you walk me through, Anthony? So I'm just putting you on the spot with some of this stuff. So I'm looking at the, can you see my page with kyber.org/vote?
Yes.
Okay. So if I were going to stake, I'm noticing there's like a few different options here, A, B, C, and D. What is the difference between these? Like, how do you know them offhand?
Yeah. So I can quickly say that what this is showing you now is if you were staking if you were staking, okay, which is the stake now or stake on the top right, you would then be in the DAO. You have your KNC staked, you're in the DAO, and now this is your chance to vote on how you want the network fees to be allocated. Now, Kyber is interesting because as a DAO model, there's 3 ways that fees can be used, right? Think of this as a corporation. It's generating fees from a product. You can either burn it, where they'll actually burn KNC. They can either reward DAO holders. They can, so if you're staking, you get paid rewards, which is where most of the money is going, which is why you get paid in the ETH, right? It's like 70%. Or rebate. Rebate is actually used to give the integrations or the end users of the DEXs and the aggregators a discount. Now we have these 3 different ways that we can balance over time. You can burn KNC to make it deflationary, or you can reward stakers, or you can get a rebate. Maybe if we need to remain more competitive, maybe Uniswap starts taking over and we need to increase our rebate. It allows for more just adjusting the business model to stay very competitive.
Anthony, the reward, if we voted on option A, it's a 67.32% reward. So is it of the fees that week, 67.32% would get rewarded to everyone that's staking KNC?
Correct.
And what does it get paid out in? It's Ether? It's not
paid.
KNC?
Yeah, it's paid out in Ether. And what I think Kyber's, I think all fees are either paid in ETH or Kyber, and then on the liquidity side, and then they're just swapping it. So like from a reward perspective, as a staker, you're paid in ETH. If it's the burn, they're burning KNC, and KNC is obviously like the ownership token of the protocol.
Yeah, got it. No, that is really helpful. It's interesting to me that it's 1 proposal per week. That actually seems handy, just because I do get a little bit overwhelmed with, like, I haven't been voting in many of the Yearn finance, the YIPs, those improvement proposals, but I was overwhelmed for a while with just, there's so many.
For sure.
I like the fact, so there's only 1 per week, or could it be more than 1?
You know, I actually just can't speak on that. It's one small piece of my portfolio, so I unfortunately am not a Kyber expert.
No, but this is great. Oh no.
Yeah, and I'll be honest. I use Unagi. It's some third party who basically you delegate and they vote for you. It does require you to put in an email and a password. So like it semi KYCs you.
Makes sense. Okay. Yeah. So yeah, I get you. Yeah, no, good to be aware of that. I know there's still there's definitely still some rare instances with really like top tier trusted teams where I'm like, I would rather not share this information, but it normally has to do with the team being in a part of the world that's more regulated. But anyways, like I hate to make exceptions, but I don't know. I feel like we're in this like early phase of DeFi, and you know, it's always a matter of considering all the context and okay, why, for example, in Nexus, as much as I love Nexus, I do have to KYC to participate, but they are moving towards a decentralized organization, and that's why I was excited about Wrapped NXM, because you don't have to KYC to gain access to it. Anthony, I'll ask you this. I have no idea what it is. What do you know what BNSD is?
BNSD?
Comments here. Yeah, I forgive me. Like it doesn't. The fact that I don't know what it is doesn't.
Well, it's probably a new farming thing with high inflation that everyone's going on about. But I would be
interested if folks here in the comments, like I appreciate you calling attention to it. It says, someone here said, I'm going to stop sharing my other screen here. Said,
if they want to send a link, we could like review it. Oh
yeah. I was gonna. Link.
SEC's coming at us.
I've been worried with links, just because someone could put in a link that has like, it could be a phishing website. But sure. I have heard of this, and I really need to dig into it. BNSD is a DeFi coin from India's larger crypto exchange. Is worth. Is it from exchange? Is that what help us understand that. It doesn't help me if it's from an exchange, because if it's from an exchange like a centralized exchange, it's kind of like the BNB token.
That's what I'm thinking.
Yeah.
Yeah. Where then, if someone's trying to invest into that, you just sit down and you look at the token economics, and it probably is burning or yielding based on some kind of volume, and you could do some formal calculation to see what it might be worth.
Yeah, absolutely. I definitely start. I normally start with really like simple matters like what's the supply? What is, if we're looking at the price, like what is it when it's fully diluted?
Mm-hmm.
I tend to just focus on the utility of tokens. So I am interested. I appreciate folks calling this out. I will have to I'll have to look into this some more. Just bought a bag. Anyways, it's interesting. I would love if someone does comment BNSD, like if it's a token that is from a centralized exchange, I'll just be blunt. It probably won't interest me as much, but I would love to know.
I think we're getting bombarded by the BNSD crew right now.
Hey, whatever. There we go. Got people watching. First time I've been bombarded by it, but I appreciate it. I mean, that's the point, is to listen to what everyone's interested and see if we can explore those topics.
Mm-hmm.
Let's see here. I'm going to just hide that. Let's see, Anthony, going back to projects that you've been following. So like we just talked a lot about Kyber, learned a little bit more about staking. Any other DeFi projects that maybe you think aren't getting as much attention that should get more attention? Like one example for me is, and I don't have exposure to this, so again, like I feel like I'm good to talk about them a moment. PieDAO. PieDAO is really interesting because you get diversified exposure with like a basket of different tokens in each one of these pies, and it's kind of like an ETF. They launched some yield farming program over the weekend, and
you're leaking the alpha right now.
Yeah.
Thanks.
Yeah.
But I agree. I think PieDAO is super interesting. To like those who are a little familiar with traditional finance, it's basically like building ETFs. And so PieDAO is a DAO. So like Yam is a DAO, Yearn is a DAO, Kyber is a DAO, Pi is going to be a DAO. And what this just is you guys have a chance to become owners and users on new, essentially, organizations, corporations, where you can help direct it and you can earn the cash flows. And PieDAO is one of the first like premier people who are building DeFi native, crypto native ETFs, which is amazing and exciting.
Yeah, we covered this a bit the other day, but just in case folks aren't familiar with it, just go to pools.piedao.org, and there are currently, I think there's just 3 different pies. This is DeFi small market cap. So these are smaller market cap tokens that are related to DeFi, versus this one here has all tokenized Bitcoin in it. And then this one here is kind of like like a basket of stable coins, which I really like. The idea behind this could be, if you're holding USDC DAI, True USD, and Synthetic USD from Synthetics, if one of them fails, the idea is that like you're still exposed to some other tokens and you're kind of hedging against that collapse. Mm-hmm. The only thing is, I'm not totally sure. These are all normally powered by Balancer. I think they are still. There's a few that the team mentioned that they'll be doing without Balancer. But if it was on Balancer, if one of these went to 0, I think all the tokens would end up going to 0. Maybe I'm not understanding that correctly. Do you know, Anthony?
I actually don't know that. I actually don't know how that functions. Like I like Balancer. I love Balancer. I know Placeholder is like majorly invested in them. And I typically follow a lot of Chris Berninski's leadership, as well as Joel. So I don't know. I assume there's probably something to help protect against that, but there is a lot of these like concentrated risks in crypto that people should understand.
Yeah, absolutely. Yeah, I've noticed that these stablecoin baskets though have become a little more popular. There was MStable, kind of they were the ones sort of championing the idea, And I think it's very likely, even in a year's time, that there will be a basket of stable coins that people will refer to as a stable coin, but it'll be like the Swerve US dollar, which is just a fork of Curve. You're exposed to multiple.
It's called YUSD. Let's go.
Yeah, exactly. Yeah, YUSD is a great example. Like, well, YUSD is that on steroids because you're earning market making fees and interest. So YUSD is one that I tend to hold. Anthony, there's actually another question here that I thought was worth touching on. I don't know a whole lot about Solana or Serum, but I have been like following Sam from FTX. Like, I think he's really interesting to listen to, and he's clear. He's a very smart person. But I also know like one of the criticisms of Solana is just that it's more centralized. I mean, there's zero question about it. There's less participation at this point. I'm all for innovation, and I realize that we're probably looking at a universe of different blockchains in the future. I still think Ethereum is probably the largest landmass in that universe. But I am like interested to keep following Solana and like see what comes of it. Do you have any thoughts though on like?
Yeah,
Solana?
I think it's kind of higher up on its hype cycle in terms of most. And I wrote an article on this. People can look it up. It's like look up the Ethereum hype cycle. Hype cycles occur and based, they continuously get more and more hype. Utility may or may not be there, and then they inevitably come down. I think Solana is higher up on its hype cycle than it is on its utility. To my last of my knowledge, the blockchain size is already larger than Ethereum's, which is a major criticism of Bitcoiners to Ethereum that, your blockchain is too big. I believe to be like an actual node operator, you have to have like gigabit internet and like a data center. I could be wrong about that, but I get kind of like EOS type vibes where like it can definitely play a role for like high TPS, more centralized options. But then the question is like, just go use XDAI. I would argue it's more secure and just as fast.
And you know what, to be fair, I'll end it with that just because I don't know enough about it, but I do recognize that FTX, which has really been one of the most innovative centralized exchanges, just having their support gives it a lot more momentum. So like I'm excited to watch it. I think like the goal here is I don't want to make the mistakes of the Bitcoin community that I've seen. And again, like I'm there's zero question. Like I mostly pay attention to Ethereum. 99.9% of the activity is there, and it's going to be very difficult to escape these network effects. It's exciting too. Like this is a good thing in my opinion. Like the fact that it's already difficult to build a startup, it's even more difficult to build a startup and to know that the blockchain you're building on is going to survive or be successful or attract other developers. And so Ethereum at this point I think is beyond that point. Like, that if you build on Ethereum, that you have a vibrant ecosystem of others that are building money Legos that will benefit you. I will be interested though to see how interoperability plays a role in the future. The Ren protocol definitely blew my mind this year. Like it caught me all off guard, and I was like, "Whoa! I'm tokenizing Bitcoin, and I'm able to use that value now in DeFi on Ethereum. Like this is the coolest thing ever." So, anyway,
and I'm not like an Ethereum maximalist by any means. I mean, people will say, some of us Ethereum supporters are. Obviously, composability and network effects are like the hugest thing for these networks. But I mean, like I would love to highlight like Terra Luna right now. I mean, that's built on the Cosmos SDK. They're an amazing platform that is revolutionizing payments in Korea. They currently, if you are an investor or owner in Terra, you're getting paid about a 10% non-inflationary yield, similar to like Kyber. And so like there's definitely great projects out there. I think the Cosmos ecosystem is kind of the next up and coming once they've solved IBC. And someone's mentioning, Substrate and Dot. I like Substrate. I think building on it can make sense for a lot of people. I do think the cross-shard communication is going to be interesting to see play out. And I wish I knew more about kind of the new roll-up roadmap where Ethereum is making a little bit of like a pivot to increase scalability a lot faster with these new roll-ups. So there's just so much exciting things going on, and I think being diversified is important, but I still stay mainly in ETH because of the fundamentals.
Yeah. No. That's great. That's funny. Substrate too is something I need to do more research on. I just I think like what the other blockchains that I do pay attention to, or I'm being told I should, is it's Polkadot and Cosmos tend to come up more in conversation. Would you say that tends to be it? Binance Smart Chain, I realize there's some activity there. Cream, I thought it was really interesting that Cream, I'm trying to think of who else has done it too. Cream launched a Binance Smart Chain application. Actually, if folks are looking to learn more about that, go to DBank. DBank has done this incredible job of curating like almost like a wiki of all this information. And anyways, it's been, as much as, this is Yield TV powered by Zapper.fi, we're all in it together. And I really respect what they've done in terms of curating that information. So, Anthony, what about, let's talk. I want to make sure I get you off here in the next like 5 to 10 minutes, just because I know you have another call coming up. What do you think about Ethereum 2.0? Can you just at a high level let us know, like, where are we? When does that phase 0 launch? And if I am one that holds Ether, is there anything I should be doing between now and then?
Yeah, that's a great question. I mean, it's the most common thing that people, ETH holders, are kind of worried about right now. The test net's running live right now. It's doing well. We've done, I don't know if it's today or when, but we're going to be doing the second dress rehearsal with deposits and setting it up. For listeners, Ethereum 2.0, just think of it as a new next generation blockchain that is going to be kind of sitting here on the side. With the most cutting edge computer science really in the world right now. The smartest people are building it. It's the most decentralized blockchain project ever built. If you look at, say, EOS or Bitcoin or Ripple or Cardano or Polkadot, all of them have one software implementation built by one team. Now, Ethereum right now, we actually have two, right? We have Open Ethereum, I think that's the name. And then we have Geth, right? So we actually have two. It's more decentralized. Ethereum 2.0 is by far the most decentralized open source blockchain protocol ever invented. There's more than 7 different software implementations from 7 different teams, multiple different languages. It's absolutely insane. If you're holding ETH right now, you don't have to do anything. You'll have the option to bridge some or all of that onto Ethereum 2.0 to earn yield. But what's so cool right now is tomorrow, Rocket Pool is going to be launching their testnet. And so everyone should check that out. It's called Rocket Pool. If you want to be staking your Ethereum and you don't have the technical chops to set up a validator node in your house or in the cloud, which isn't as good, Rocket Pool is great. You don't need 32 ETH. You can have 1 or 2 or whatever, and you'll be able to stake it. You'll be able to keep your custody, and better yet, you're gonna get back our ETH in return. So you stake your ETH, you're gonna get Rocket ETH, which is a liquid staking derivative, meaning that if you want to go sell it, if you want to go farm with it, I expect Rocket Pool to be a very, very, very novel, interesting piece of composability for the Ethereum ecosystem starting tomorrow on its testnet launch.
So this is, Anthony, this goes against, we've all seen like the meme of like, you need 32 ETH and this is how much it costs. Evan Van Ness is always kind of funny about that. He's always saying like, it now costs this much money. You won't need 32 ETH here. You won't have to run a node. You'll just be able to stake. Oh, here it is. Stake as little as 0.01 ETH and instantly receive our ETH, a tokenized stake. So it's your usual like DeFi user experience then. You're just depositing whatever fractional amount that you want, and then you receive the IOU token, in this case is our ETH, and that gives you a stake to come back and pull your Ether out. in the future. Do you know, is there any sort of lockup to this? Like how long you have to remain, or can you just pull it out whenever you want?
Yeah, that's a really good question. I actually don't know. I can say is what I expect is the RETH token to be like liquid on the secondary markets. So you'd be able to swap it for ETH. Um, it is worth people kind of doing research on, right? Because you are moving your Ethereum to Ethereum 2.0 and kind of the nuances of that. But yeah, for the investors who don't want to run their own node, or they don't want to have to go trust Coinbase or Kraken to not run away with their money or lose their money or any of those risks, yeah, you'll be able to stake with Rocket Pool. There's going to be a large set of stakers who are, vetted and trustworthy, and there's crypto economics to make sure they're acting accordingly. And it's a great tool, man. Very great tool.
This is really cool. I didn't know about this. I definitely need to try to get a hold of. I think his name's David, who's like one of the founders of it. So I highlighted it there. What are the staking periods? None for both stakers and node operators. Come and go as you please. I mean, unless that's changed.
Good find.
This was okay. Well, I'm assuming they've been updating this. This goes back to December 12th, 2017. So we'll have to see.
But, yeah, that was the original kind of white paper area probably. And so, I mean, this is something that's been in development for a while. They are legit. I mean,
wow, that's so cool. And you said this goes live tomorrow.
Tomorrow is like an incentivized test net. So for users, you guys can go use it, practice it, get acquainted, and possibly even get paid to do it.
Wow. Very cool. I'm putting that launches tomorrow. So now we've got that banner to let people know. And then here is the website to check that out. And I don't have enough time to grab the rocket emoji, but it would make so much sense for me to have done that. Yeah. There we go. Rocketpool.net. Very cool. Man, this is so great. I learned a lot today with you. It's funny, like
thank you.
As often as we touch base, here I am just learning about Kyber and Rocket Pool. Dude, I learned 2 things today. Hey, I want to make sure we get you off in next minute or so here. But Anthony, anything else that you think folks should be paying attention to in Ethereum or DeFi? I want to remind everyone to check out the Ethereum podcast, Ethereum Entrepreneur Podcast. And you can follow Anthony at iDecentralize, but his podcast is at Ethereum Pod. And he has all sorts of great guests, not me, but others were wonderful.
Yeah, what I'd say is that a lot of people, so if you're in the US and you're listening, this is super important. A lot of crypto investors don't understand the value or the importance of retirement accounts. So now, and I work for a company called iTrustCapital. So if you are an investor in crypto assets and you're in your US based and you're not holding, and this goes for you too, Dad, if you're not holding some inside of an IRA, like a Roth IRA, you need to do some research and really decide why you're not doing it. Because with a Roth IRA, you, long story short, can say buy, 32 ETH. And if that does a 10x or a 20x over the next 5 or 10 years, you pay no taxes. So if you want to invest tax-free in crypto assets, head to iTrustCapital. I always got to plug it because at the end of the day, it's something a lot of people don't even know exists. They don't even know it exists. And it's the best thing.
Is it iTrustCapital.com?
Yeah, iTrustCapital.com. And I manage brand and customer experience there. So, I am employed by them, but I work there because I want to. It's the best thing since sliced bread.
I didn't realize this. Of all the things we've talked about, I didn't realize. So a good example is this. I put in, let's say, 1 Bitcoin. 1 Bitcoin today, if I put it into that and I'm paying, how does this work again? Like I'm paying the taxes up front, right?
Yeah, so a Roth IRA, there's kind of 2 ways to get money in there. You can roll over an existing retirement account. So if you have an old 401k, an old retirement account, another IRA, you can roll that over into an IRA. Or if you don't have a retirement account, you can start a new one. There are restrictions. The government doesn't want you putting all your money in it. So you can put 6,000 to 7,000 per year. It's designed for you to build it up over time. But yeah, you say you throw 6K in there.
Holy cow.
Crypto does a 10X. You now have 60K and you still don't owe any taxes. It's just called a Roth IRA. It's been around, for years. We're the first company that allows you to do crypto and precious metals. Whereas normally you got, stocks and bonds.
Yeah. Whoa, that's cool. I didn't realize. Okay, so So you're one other question on this, and I'll just go to this iTrustCapital.com and learn more about it. But the rollover I'm familiar with. How else does one normally get, let's say, Bitcoin or Ether into an
IRA.
Roth IRA? Yeah.
Yeah. So if you're not doing a rollover, right, and you need to fund an IRA, the IRS requires you to fund in US dollars, unfortunately. So that's important to note. So you have to put in US dollars, like as if you're using Coinbase, and then you can buy crypto. We charge 1% per trade. So there is a fee, but it's still cheaper than, Coinbase. But it's just something for people to do research on. It's a tool that needs to be in your tool chest. If you're in the US and if you invest in crypto, it makes no sense to not have one.
Yeah. So I could deposit dollars, and then once the dollars are in there, if it's through iTrustCapital, then I can buy some Ether or Bitcoin through that.
Yep.
One last question on that. Where or when is the tax paid? Because a Roth IRA, you pay taxes up front. And so I guess I can't remember. It's just the fundamental mechanics I'm asking more about.
Yeah, it's just post-tax. So when you're funding a Roth, it's money that you've already paid taxes on, meaning money from your bank account, unless you run like a cash business, right? Like if you're a normal person, you would just pull, money out of your bank account and you're good to go. That's Roth IRAs. They're very powerful.
I'll check that out. Thanks so much. I got 3 things going on here. So IRAs with crypto, Rocket Pool launches tomorrow, and Kyber. Yeah.
And yeah.
Hey, you got to come back on sometime. And I think we've covered, let me just double check. I think we've covered most of the questions. Any thoughts on Anchor? There was a quick one here. I don't know anything about Anchor.
I think that's an infrastructure. I think if I understand Anchor correctly, it's been a while. I think they allow you to like spin up like blockchains inherently in like some type of cloud system, which would, if you can, it would be much more cumbersome than using Rocket Pool if your goal is to stake. And Anchor, it sounds like from a infrastructure play is like, it can be very useful. I don't think it's useful for regular investors who want to stake ETH, but I could be wrong.
Really interesting. Yeah, really interesting. There's one last question, but it's a quick answer. Someone asked about crypto.com. I don't use crypto.com myself, but I know that the one interesting thing they offer is this debit card. I'm not interested in the DEX because the DEX, as far as I understand, I would classify as being very centralized. Yeah. But I mean, whatever, like I will say, if you can get a Visa to spend something like DAI or Ether, that's still unique. And I know that I don't use it myself, but I get paid directly in USDC or DAI. So I'm totally full on bankless at this point. And I can tell you it's a pain to get that money out of the system and go through an exchange. And so this is one really clever way to do that. But cool. Well, thank you so much, Will, for a great question there. Pyramid, thanks for the great question. Hey, Anthony, thanks so much for your time. I think I'll just go ahead and let us sign off here. Tomorrow we'll be back with Scott Lewis, which Scott from DeFi Pulse.
DeFi Pulse. And other things too. Is it Concourse Open?
Gas Station. What else does he do? It's Concourse Open, and they work on DexAG too, which is a DEX aggregator that I use. So yeah, it'll be really exciting to talk to him. But
sure.
You got to come back again. And thanks so much for spending all this time with us.
Yes, thank you, bro. You have a wonderful day. I hope you continue to grow this. This is amazing. I'm so happy for your new job at Zapper, and just keep crushing it, bro. You're doing a great job.
Thanks, man. No, I appreciate it. It's good to see you.